On a bitterly cold morning in Amsterdam, 1637, frost covered the cobblestones along the Herengracht Canal as merchants and traders huddled in their thick woolen cloaks. The air was thick with anticipation as a single Semper Augustus tulip bulb changed hands for an astronomical sum of 10,000 florins, equivalent to the price of a magnificent mansion overlooking the city's most prestigious canal. Few could have imagined that by sunset, this seemingly unstoppable market would come crashing down, marking history's first major financial collapse. The story of modern finance, however, begins several decades earlier, in the year 1602. Picture Amsterdam's bustling port district, where salt-laden air mingles with the scents of exotic spices from distant lands. In a modest building near the waterfront, a gathering of merchants, their faces weathered by years at sea and their fortunes built on daring trade ventures, assembled for what would become a pivotal moment in economic history. These men, though they couldn't have known it at the time, were about to transform global commerce forever. They were the founding members of the Dutch East India Company, an enterprise that would become not only the world's first publicly traded company, but also its first multinational corporation. The innovation they introduced, freely transferable shares, would revolutionize how business was conducted across the globe. As morning light filtered through the tall windows of their meeting room, these merchants debated and drafted the documents that would create the first modern stock market. Their discussions echoed off wooden-paneled walls as they established the frameworks for shareholding, dividend payments, and corporate governance, concepts that continue to shape our financial world today. The significance of their creation extended far beyond Amsterdam's canals. By allowing ordinary citizens to purchase shares in commercial ventures, they democratized investment and created the foundation for modern capitalism. The VOC's shares would soon be traded in coffee houses and gathering places throughout the city, creating a secondary market that would evolve into today's stock exchanges. This revolutionary system would eventually lead to both tremendous opportunities and devastating crashes, as exemplified by the Tulip Mania that would occur just 35 years later. The stage was set for a new era of commerce, where fortunes could be made and lost, not just through traditional trade, but through the buying and selling of financial instruments that represented the promise of future wealth. These early moments in financial history continue to resonate today, reminding us that the fundamental patterns of human behavior, from unbridled optimism to crushing panic, remain remarkably consistent across the centuries. The legacy of those merchants meeting in 1602 lives on in every stock exchange and trading floor around the world, a testament to how a single innovation can reshape the entire global economy. 17th century Amsterdam pulsated with life as a symphony of commerce echoed through its streets. The harbor's constant bustle created an urban soundscape unique to this trading metropolis. Merchants' voices carried across the waters, haggling in multiple languages, while sailors' songs blended with the rhythmic counting of coins in counting houses. The metallic chime of guild bells marked the hours of trade, their sound carrying across the web of canals that define the city. The olfactory landscape told its own story of global commerce. Newly arrived ships brought aromatic treasures from across the seas, cinnamon and nutmeg from the Spice Islands, coffee beans from Arabia, and tobacco leaves from the New World. The air was rich with the scent of exotic woods being unloaded at the wharves, while roasting coffee houses filled narrow streets with their enticing aromas. These smells became the signature of wealth and global connections. Through the Golden Age lens, Amsterdam's visual splendor was unmatched. Massive merchant ships, their sails catching the North Sea wind, dominated the harbor. Their holds brimmed with precious cargo from distant shores. The city's famous canals, engineering marvels of their time, carved through the urban landscape, their waters reflecting the unique Dutch architecture above. Warehouses lined these waterways, their sturdy doors concealing fortunes in trade goods. The city's architecture spoke volumes about its commercial success. Narrow houses stretched skyward, their distinctive stepped gables becoming a symbol of Dutch prosperity. Large windows, a sign of wealth due to the high glass tax, allowed merchants to display their success while flooding interiors with light. These buildings, many still standing today, represented the perfect marriage of practicality and prosperity. Isaac Lemaire emerged as a pivotal figure in this transformative period. As an early director of the VOC, he understood the company's inner workings intimately. However, his greatest contribution to financial history came after leaving the company. Lemaire pioneered short-selling techniques, becoming the first documented short seller in financial history. His sophisticated trading strategies, though controversial at the time, laid the groundwork for modern financial practices. When the VOC's monopolistic practices troubled him, he became its most prominent critic, demonstrating early advocacy for free market principles. Hendrik de Keyser left an equally lasting legacy through his architectural genius. His design for Amsterdam's first stock exchange building revolutionized financial architecture. The building combined functionality with symbolic power, featuring an open courtyard for trading surrounded by covered galleries that protected merchants from the elements. This design became the template for stock exchanges across Europe, influencing financial architecture for centuries to come. De Keyser understood that a financial center needed both practical utility and impressive grandeur to establish its legitimacy. The transformation of commerce in Amsterdam rippled across Europe and eventually the world. The city became not just a trading hub, but a laboratory for financial innovation. The sophisticated financial instruments developed here, combined with the architectural and urban planning innovations, created a model for modern commercial cities. The legacy of this transformation continues to influence global commerce and urban development today. This period marked humanity's first steps toward a truly global economy, with Amsterdam serving as its beating heart. The city's transformation from a modest fishing village to the world's financial capital demonstrated the power of combining commercial innovation with urban development. The echoes of this golden age still resonate in today's financial centers, from Wall Street to the City of London, all of which owe a debt to the pioneering spirit of 17th century Amsterdam. The dawn of the 17th century witnessed a revolutionary transformation in how wealth could be created and transferred. For the first time in human history, the Dutch East India Company introduced freely transferable shares, a concept that would forever change the global financial landscape. These negotiable securities represented a fundamental shift from traditional forms of ownership to a more fluid, market-based system. The creation of tradable shares marked the birth of the market value concept. Previously, an asset's worth was largely determined by its tangible properties or immediate utility. Now, value became a dynamic force, shaped by the collective expectations and assessments of market participants. This revolutionary concept introduced the notion that an asset's worth could fluctuate based on future prospects rather than just current reality. The development of the first organized secondary market represented another quantum leap in financial evolution. This innovation allowed investors to buy and sell shares without directly engaging with the company, creating liquidity and price discovery mechanisms that remain fundamental to modern markets. The Amsterdam Exchange became the template for all future stock markets, establishing protocols and practices that would spread across the globe. The period witnessed an explosion of financial innovation. Futures contracts emerged as vital tools for managing trade risk, allowing merchants to lock in prices for future deliveries. These contracts soon evolved beyond their original commercial purpose, becoming sophisticated speculative instruments that could be traded independently of the underlying goods. Options trading introduced an entirely new dimension to financial markets. Put and call options gave traders the right, but not the obligation, to buy or sell assets at predetermined prices. This innovation provided new ways to manage risk and speculate on market movements, creating the foundation for modern derivatives markets. Maritime insurance transformed oceanic trade by distributing risk across multiple parties. This innovation enabled merchants to undertake more ambitious ventures while protecting their capital. The standardization of bills of exchange facilitated international trade by providing a reliable method for transferring funds across borders and currencies. The story of Tulip Mania provides a fascinating case study of market psychology and financial excess. Beginning in 1634, what started as enthusiasm for rare tulip varieties transformed into a nationwide speculation frenzy. The timeline of events reveals the classic pattern of asset bubbles that would be repeated countless times in future markets. The speculation intensified in 1636 with the creation of tulip futures markets. Traders began selling tulip bulbs that were still in the ground, sometimes even before they were planted. The market reached unprecedented heights as bulbs changed hands multiple times per day, each time at a higher price. By early 1637, some rare bulbs were selling for more than 10 times the annual income of a skilled craftsman. The subsequent market collapse in February 1637 was as dramatic as the rise. Prices plummeted virtually overnight, leaving a trail of bankruptcies and broken fortunes. The crash demonstrated the dangers of speculative excess and the consequences of disconnecting prices from fundamental value. The Tulip Mania's social impact was profound and far-reaching. Unlike previous financial events that primarily affected merchants and nobles, this speculation drew participants from all social classes. Farmers sold their land to speculate in tulips, while craftsmen traded their tools for bulbs. The democratization of speculation became both a social revolution and a cautionary tale. The speed with which fortunes were made and lost fundamentally altered society's perception of financial risk. The experience demonstrated that wealth could be created and destroyed through financial speculation rather than just traditional labor or inheritance. This shift in understanding would influence economic behavior for centuries to come. The lasting legacy of this period extends far beyond its immediate aftermath. The financial innovations developed in 17th century Amsterdam, from share trading to futures contracts, laid the groundwork for modern global markets. The lessons learned from Tulip Mania continue to inform our understanding of market psychology and the importance of financial regulation. In many ways, this period marked the true beginning of modern financial capitalism, with all its opportunities and pitfalls. The financial innovations of 17th century Amsterdam cast long shadows that extend into today's global markets. The price formation systems developed in those early trading sessions continue to influence how modern stock exchanges operate. Today's sophisticated electronic trading platforms, while technologically advanced, still follow the basic principles established on the floors of the Amsterdam Exchange. The matching of buyers and sellers, the public display of prices, and the importance of market liquidity. Financial regulation, a critical component of modern markets, traces its roots to the challenges faced during Amsterdam's financial revolution. The responses to early market manipulation attempts, including the world's first short-selling restrictions implemented against Isaac Le Maire, established precedents that modern regulators still reference. Contemporary debates about market oversight often echo the same fundamental questions faced by Dutch regulators 4 centuries ago. Corporate governance practices that we now take for granted, shareholder voting rights, dividend policies, and financial reporting requirements, were first developed by the Dutch East India Company. The VOC's innovative organizational structure, with its separation of ownership and management, established patterns that modern corporations continue to follow. The concept of shareholder value, now central to corporate decision-making, emerged from these early experiments in shared ownership. Modern derivatives markets represent a direct evolutionary line from their 17th century predecessors. Today's complex financial instruments, credit default swaps, collateralized debt obligations, and various exotic options, are sophisticated descendants of the simple futures and options contracts traded in Amsterdam. The fundamental principles of risk transfer and price discovery remain unchanged, though the mathematical models used to value these instruments have become increasingly complex. High-frequency trading, while enabled by modern technology, builds upon the same market dynamics that Amsterdam's traders exploited. The search for price discrepancies and trading advantages, now measured in microseconds, reflects the same basic impulses that motivated early speculators. The global integration of financial markets, allowing 24-hour trading across time zones, realizes the international ambitions of those early Dutch merchants on a scale they could hardly have imagined. The parallels between historical and modern market phenomena are striking. The Bitcoin bubble of 2017 to 2018 and the dot-com boom of the late 1990s mirror the fundamental patterns of Tulip Mania. In each case, new technology or innovation sparked widespread speculation, drawing in investors from all social strata and leading to prices disconnected from fundamental value. The subsequent crashes followed eerily similar patterns, demonstrating that human nature remains constant across centuries. Modern financial regulation continues to grapple with challenges that would have been familiar to 17th century Dutch authorities. How to balance innovation with stability. How to protect investors while maintaining market efficiency. The ongoing debates about cryptocurrency regulation, for instance, echo historical discussions about tulip futures trading. Market psychology shows remarkable consistency across time. The emotional cycles of fear and greed, the herd mentality that drives bubbles, and the panic that triggers crashes remain fundamentally unchanged. Modern behavioral finance, while equipped with sophisticated analytical tools, often confirms insights that Dutch merchants gained through hard experience. The legacy of Amsterdam's financial revolution offers crucial lessons for contemporary markets. The importance of transparency, the need for balanced regulation, and the dangers of excessive speculation remain as relevant today as they were 4 centuries ago. The innovation-stability balance that challenged Dutch regulators continues to occupy modern policymakers. The evolution of financial markets demonstrates both remarkable progress and surprising continuity. While technology has transformed the mechanics of trading, the fundamental dynamics of markets, price discovery, risk management, and capital formation, remain rooted in principles established during the Dutch Golden Age. Perhaps most importantly, this history reminds us that financial markets are ultimately human institutions, subject to human psychology and behavior patterns that transcend time and technology. Understanding this historical perspective is crucial for anyone seeking to navigate today's complex financial landscape or shape its future development. The story of Amsterdam's financial innovations continues to unfold in today's global markets, offering valuable insights for investors, regulators, and market participants. As we face new challenges and opportunities in the digital age, the lessons learned from this pioneering period remain remarkably relevant and instructive. The remarkable story of the world's first modern stock exchange reveals a profound truth about financial markets. While technology and instruments evolve, human nature remains constant. The streets of 17th century Amsterdam, though separated from us by centuries, mirror the fundamental dynamics we observe in today's financial centers. When we examine the early Dutch markets closely, we find striking similarities to contemporary financial behavior. The enthusiasm that drove tulip prices to astronomical heights parallels the cryptocurrency fever of our time. The sophisticated trading strategies developed by merchants like Isaac Le Maire would be recognizable to modern hedge fund managers. Even the panic selling that characterized the tulip market's collapse follows patterns familiar to anyone who has witnessed modern market crashes. The influence of these early financial innovations on our current economy cannot be overstated. Today's global financial system rests firmly on foundations laid in Amsterdam's Golden Age. The concept of publicly traded companies, now the backbone of global capitalism, began with the Dutch East India Company. Modern stock exchanges, from New York to Tokyo, operate on principles first established in Amsterdam's trading rooms. The evolution of financial instruments demonstrates both continuity and advancement. While today's derivatives markets employ complex mathematical models and high-speed computers, they serve the same fundamental purposes as their 17th century predecessors, managing risk and facilitating trade. The global financial network that enables instantaneous worldwide transactions realizes, on a grand scale, the international ambitions of those early Dutch merchants. Tulip Mania offers modern investors several crucial lessons that remain remarkably relevant. First, it demonstrates how easily markets can become disconnected from fundamental value when speculation takes hold. The tulip bubble's progression, from legitimate trade to speculative frenzy to devastating crash, provides a template for understanding modern market bubbles. Second, it illustrates the democratization of speculation and its social consequences. Just as Dutch society saw everyone from nobles to servants trading tulip bulbs, today we witness broad public participation in cryptocurrency trading and meme stocks. The social impacts of widespread speculation, both positive and negative, echo across centuries. Third, it highlights the importance of maintaining perspective during market manias. The most valuable tulip bulbs sold for prices equivalent to luxury homes. A disconnection from reality that seems obvious in hindsight, but was less clear to participants caught in the speculation fever. This offers a valuable lesson about maintaining critical thinking during periods of market euphoria. The challenge of balancing financial innovation with economic stability remains as relevant today as it was in 17th century Amsterdam. Modern regulators face similar dilemmas. How much innovation should be allowed? When should authorities intervene? What constitutes dangerous speculation versus legitimate market activity? The Dutch experience suggests several key principles. Innovation is essential for economic progress, but it must be managed thoughtfully. The Dutch created revolutionary financial instruments while maintaining relatively stable markets for decades before the tulip crisis. Transparency and clear rules are crucial for market stability. The Amsterdam Exchange's success was partly due to its establishment of clear trading protocols and settlement procedures. Markets require both freedom to innovate and prudent oversight. The challenge lies in finding the right balance between these competing needs. As we face new financial frontiers, digital currencies, artificial intelligence in trading, and increasingly complex financial instruments, the lessons from history become more relevant, not less. The fundamental challenges of managing human behavior in markets, ensuring stability while fostering innovation, and protecting investors while maintaining market efficiency remain constant. Understanding this history provides crucial context for addressing contemporary financial challenges. It reminds us that while financial instruments and technology evolve, the underlying human dynamics remain remarkably consistent. This knowledge can help us navigate current market conditions and anticipate future developments. The story of Amsterdam's financial revolution continues to resonate because it captures universal truths about markets and human nature. It demonstrates that financial markets are ultimately human institutions, reflecting both our capacity for innovation and our susceptibility to emotional extremes. By studying this history, we gain valuable insights for managing modern financial markets and preparing for future challenges. As we look to the future of finance, with its promise of further technological innovation and new financial instruments, the lessons from the world's first modern stock exchange remain invaluable guides for investors, regulators, and market participants alike.